Getting rich quick dividend growth investing actually isn't as hard as it seems. That is, of course, if you're lucky enough to invest in the right investment vehicles. Now, in this video, we're going to go through 3 different high-quality dividend-paying ETFs. And not only do all 3 of these different ETFs have a ton to offer, but every single one of them are also in my long-term dividend growth portfolio. Now, if this interests you at all, make sure to please stick around, drop a like down below, and let's get into the first ETF. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first absolute beast of a dividend growth ETF is the Schwab US Dividend Equity ETF known as SCHD. Now, what is there really to say about this ETF? It has a cheap expense ratio, it has a really high quality objective, it also has a super high quality basket of holdings, tons of blue chip stocks that have not only paid dividends consistently over time, but also have the tendency to raise dividends consistently, which has allowed SCHD to have some massive dividend growth historically. Now, when it comes to getting rich off of dividend investing though, just dividends alone are not necessarily going to be enough. And that's another reason why I choose SCHD to be one of the 3 dividend growth ETFs within this trio, because this ETF has over tripled in ETF price over the last 10-12 years. Now, what's awesome about SCHD is that it also has a starting yield of 3.48%, which is over double the starting yield of the S&P 500. Now, a starting dividend yield of around 3.5% is going to be ideal for an investor that wants to generate cash flow from day one in order to reinvest those dividends to buy more high quality ETFs like the ones we're going to be talking about in this video. I also mentioned a second ago dividend growth, which is very important, especially if you're an investor that maybe has a timeline of say 5, 10, 15 years ahead of you, because simply said, if you do find an investment like SCHD, for example, that has significant dividend growth year after year after year, you're going to get paid more and more cash flow, most likely for years to come. Looking at the dividend growth as far as dividends paid historically, the reason on why this metric is a cheat code, it's basically giving you as an investor a raise for doing absolutely nothing on your same exact shares of SCHD over time consistently as the years go on. Now, why is this important? Think about it the same way like it's your job. If you started working somewhere at 2014 and then in 2015 you got a 15% raise year over year, you'd be pretty excited. Let's say you make $20 an hour and you get a 15% raise. Now you're making $23 an hour. Now that you're making $23 an hour, let's say another few years go by, and now you're making, let's say, $26 per hour, just in a few year time frame. Now, the reason I like to use a job example is because this is just like getting raises at your job. Only the difference is that you're not doing anything. You're not clocking in a single second. You are just owning an asset, owning a stock or owning an ETF. Again, for this simple example, it's the SCHD ETF. But you're owning something that is considerably paying you more and more over time just for maintaining ownership. Now, the reason that dividend growth is so important is because with this, you can see the snowball effect really to take shape in your portfolio. If you own, say, 10, 20, 100 of a stock or ETF that's consistently paying you more and more as the years go on, you are going to start to see the power of compound interest take place. Now, compound interest is the interest you earn on interest. This can be illustrated using basic math. Like, for example, if you have $100 and it earns 5% per year, at the end of that year, you'll have $105. And then by the second year, if you earn 5% on that, the numbers are going to get bigger and bigger as the numbers get bigger and bigger. The next dividend ETF that has the potential to get dividend investors rich is JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. Now, to learn a little bit more about JEPQ, over here on the JP Morgan website, it says that seeking consistent premium income, JP Morgan's Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. Now, the way this portfolio works, it says underlying equity portfolio employs an applied data science approach to fundamental research and portfolio construction. With that, also a disciplined option overlay implements written out the money Nasdaq 100 index call options that seek to generate distributable monthly income. And I know what you're thinking, JEPQ is in the same family as JEPI, which although JEPI has paid a pretty good dividend since the inception of the ETF, it hasn't really grown in ETF price. But JEPQ is much different. Over the last year time frame, this ETF has grown 22.11%. And that's all while paying a dividend yield of around 10%, which is absolutely massive. Now, the reason JEPQ does have the potential to pay a lot in dividends, but also the potential to grow an ETF price like it's done over the last year, is because the holding breakdown is as follows. The majority of the ETF is made up of technology stocks, which are going to be a little bit higher beta, which means they are going to move with the market a little bit more when the market moves up, which is going to be helpful for those possible capital gains. But with that, because JEPQ does sell the option overlay, there's tons of premium to be made, which is paid out in the form of dividends to shareholders. And if you look at the last few dividends that JEPQ paid out, we're talking 39 cents, 42 cents, 42 cents, and so on and so forth on a monthly basis for an ETF that's under $50 per share. Now, the reason I would have JEPQ in my trio if an investor was looking to pick 3 different ETFs to potentially get rich off of. JEPQ not only has the potential to move up in price pretty significantly because of the holding breakdown, but also JEPQ does pay a ton of dividends from day one, which once again, for me personally, I would be using all that cash to reinvest into more shares of either JEPQ, SCHD, or the final dividend growth ETF that we're going to talk about. Which brings me into the last and final dividend growth ETF that I would have in a portfolio if I was going to choose 3 different ETFs to hopefully make me very wealthy in the future. I'm talking about ticker symbol VIG, or the Vanguard Dividend Appreciation Index Fund. Now, VIG is one of the most popular dividend growth ETFs across the entire market, and for good reason. This ETF is up 237%, and that's just off a price return, not even including dividends. The ETF has a low expense ratio, has a super solid basket of holdings. We're talking top 10 holdings with things like Microsoft, Apple, United Health Group, JP Morgan, Exxon, Visa, Broadcom, Johnson & Johnson, Procter & Gamble, and so on and so forth. Around 317 different holdings. So this ETF is not only very diversified, but it's diversified in some of the best companies in the entire world. Now, VIG does pay a dividend. It is a dividend growth ETF, but to be completely honest, this ETF doesn't have the highest starting dividend yield, so an investor is not going to get rich off of the cash flow from day one when it comes to VIG, which is once again why I think it's ideal to have sort of a mix of different ETFs that all have their strengths and weaknesses if you're trying to build a rock solid portfolio. But either way, VIG does have around a 2% starting yield, something around there, which isn't bad at all. Not to mention, just like SCHD, VIG has some massive dividend growth. If you look at the dividends that were paid just as of recently, let's just for example, last December, 92 cents per share versus 87 cents the year before, versus 77 cents before that, and so on and so forth. So every single year, more or less, this ETF has also been paying more and more cash flow to investors, which once again, if you're using the cash to reinvest into more shares of, let's say, VIG, let's say JEPQ, or even let's say SCHD, that's exactly how you can get that dividend snowball to work and really see things grow quickly. So there we have it. Those are 3 different ETFs that I think could come together and make a rock solid portfolio for an investor that not only seeks capital appreciation and massive price return, but also an investor that does want cash flow from day one in order to reinvest a ton of cash flow into more dividend paying ETFs. Now, the cool thing about the stock market is that there's so many high quality dividend growth ETFs out there these days. And of course, you guys know I talk about all of them on my channel. And the cool thing is that you can really choose whichever ETF fits your specific strategy. If you, for example, are more interested in seeking cash flow from day one, then you can invest in pretty much all high yield ETFs. Or maybe another investor might be a little bit more concerned about seeking total return long term. Then you can buy into something like the S&P 500 or even something like VIG. But for me personally, I like to have a mixture of cash flowing ETFs and stocks, and also stocks and ETFs that might not pay as much in dividends, but have the potential to grow much more long term. But now I want to hear from you guys down below. If you were to build out a portfolio with 3 different ETFs that all pay dividends in order to get rich off this portfolio, which 3 ETFs would you choose? Drop the ticker symbols in the comments down below. If you guys enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.